weekend. Ira Epstein of Linn & Associates with your metals market wrap-up. And this is your weekend edition for this Friday, the 24th of April, 2020, and we're about 4:35 p.m. Central Time. So another up day in the stock market, but that's not a surprise because we saw the state of Georgia open, Texas is going to open, Colorado's going to open. We're at that point where things are starting to open. And the good news with that is now we're going to get a look-see as how do people feel about things opening, number one. What do they do when they go to different venues, number two. What kind of protections are coming out, number three. And the big part is, do the COVID-19 cases come back and surge with this reopening? That will take all the air out of the stock market if it occurs. If it doesn't occur, it's a really good sign for our economy. So I can understand why the stock market up through the weekend, going right into it. Makes sense. The gold market, obviously, if you're coming up here, the market's looking at that and going, okay, people are backing off. But remember, the gold's bigger story is all this printing of money worldwide, not just in the U.S. That's the big story for gold. It's not if the economies come back, don't come back. I don't believe they're going into a V-shaped scenario. And the reason I don't believe it is I don't know anyone that's just going to go back to normal. I had to have today my modem fixed in my house. So they came out. The man's got his masks, his gloves. He didn't want to get within 6 feet. Didn't even want to come in my house, wanted me to do it. I said, no, we're not going to do that. I said, I will walk back, but I'm not going to be on the phone calling the companies again. We've all been in this situation that you've got to come out. I'll give you all the time you need. I'll be nowhere near you. And that's how we did it. But that's what I'm saying. Everything changed. So just be aware of that. It is a change, and we'll see what that means. On the weekend edition, we look at one monthly chart, and then every other chart that I show here is going to be a weekly chart. So in the gold market, we have been hitting on a regular basis this upper Bollinger Band. A couple of things important there. The band isn't even starting to roll over yet. That would be indicative that maybe the market's running out of momentum. It's not done that. The market has got a pattern with a lower low, a higher high. It stayed over the 18-week average of closes, frankly, this whole year. I think it had one break back under it, in 2019. But when we get into this time frame, and it's a monthly chart, remember that, it has just stayed over it. So it's had an upside bias all the way long, and it has been staying up over that number. Now, staying over the Bollinger Band, whether it's a weekly chart or a daily chart, it's very difficult to do it more than 5% of the time. Almost, I don't think the algorithm allows it. Number two, what happens is getting over that is a sign it's a little bit ahead of itself. That's all. But it's a monthly chart. It's got plenty of price room to correct itself and play with that. The weekly chart gets shorter, and then the daily much shorter. On the weekly chart, we had this surge in price. The market's held in, and you're sitting here right now for the week up another $34 at $1723.50. If we go back on the weekly chart, the highest close we've recently had is $1736.20. So the market's doing well. What we don't want to see is it come back and settle under that low, because that could be more of a correction is in store. And if it doesn't, that looks good. When we come to a weekly bar chart, now let's take a look at, is there a pattern here? Well, the pattern has been one of higher lows, higher highs. This is where the bull market has shown itself, not the daily chart. The weekly chart has been where it's been showing itself. The market held this test of the 18-week average of closes, which is over the 200. As you can see here, the 200, then the 100. They're all lined up bullish. Where's the resistance? Right here. So we got up and over the weekly, over the upper Bollinger Band, got thrown back. Now you're still not over it. You're running against it. And that's what we've been doing, fighting to push that out. Still a very bullish chart, still good support in the 600 level in this market, and momentum is still pointing to the upside, not streaking crazy. So still looking good on the weekly charts. The gold-silver ratio, it got hurt this time. It had been doing fine with the pattern coming down like this, but what you didn't want to see is it get back over there, and it did it. So now the silver is acting weaker than the gold, and we see that clearly on the chart. First thing that's crystal evident is you're not over the 18-week average. You're under it. So you've had downside bias, and it's been that way on the weekly chart literally since, February or so it got about there, and it's stayed down. It got one big price plunge, came back up, and now the 100-week average, the 100 in green, is your resistance point at 1586, let's call it. Should the market clear now 1630, that would be interesting. Why? Well, that means you'd be probably in line for that 18-week average of closes. We have had the swing line up. It's been countered because the market is staying under the 18-week average of closes, and I define bias from the 18-week. If the market is under it, bias is down. Over it, bias is up. It's a filter on the swing line. Do you take the buy or sell signals on the swing line? Bias down, swing line up, you're doing nothing. That, for those of you that want to play that, oh, look what you missed, go out and do it. I'm not stopping. I'm telling you my way of doing it. If it was all correct, I'd be the richest guy in the world, and so would you. Doesn't work that way. When we take a look at the next chart, let's see if I can get a copper. There we go. The copper market fought pretty hard. Look at this week. We had a pretty good size break, and the market has come back. It's settled down for the week, but I'd call it a win for the copper. It recovered quite a bit here. You've got lower highs, lower lows. The bigger picture is still bearish, not bullish. Even if the market rallied right now to 252, let's call it this 18-week average, first of all, I have to take this arrow and move it back here because you ended up with the higher high this week, so I forgot to do that. You've had a switch where momentum's up, bias down, trend down. The market is still fighting a lot of bearish forces, and as it's working its way up, it's grudgingly working its way. I see a lot of resistance in that 252 area, but that's like a move for a year. That's 19 cents. That's not a little bitty move. That's a big move in this market. In the platinum market, you have been fighting the battle of no car production. Platinum and palladium get used in auto production. So does rhodium. So as you put it all together, this is where the pattern of the downtrend came. Now, it recently flip-flopped. It got back over the lower Bollinger Band. It set up a pattern of higher lows, certainly the higher highs. The negative to this market is it's been under the 18-week average, so the bias is down. So it's one thing to get knocked out of a short position, which is right here is where I think that happened. When you took out this high on this week, which was the 17th, a week ago, that's where I think the shorts came out of the market. But they had a heck of a run all the way down. Did some get out of Bollinger Bands? Well, of course, but I'm talking on swing line. Now, I'm also watching and getting concerned that this 18-week average is starting to get close to that 100-week average. And I do realize that some auto production will consume more platinum than none. But I also understand during this whole time, production in mines that went on, that stuff's on the ground. Where is it? And it's building. I do admit that in the copper, I'm watching Shanghai, and I'm seeing what's going on, and they're pulling a lot of copper out of the warehouses. So that is good. I haven't seen too much on the platinum so far. In the dollar index, the trend has been up. Higher lows. You had a pattern of lower highs. So you sort of swung this market and went neutral. And that is the problem that it had, and it's recently done that. If we look at this high back here, it was 101.03, and then you come all the way up to the higher one, of course, and you can see that. So you ended up with that weird pattern of lower highs, higher lows. The legacy carries that the lows won the day because they're the ones that started off with the pattern. So that's how I look at it. You need to get over 101.03 to keep that pattern going. Momentum is flat, bias up, trend up in this market. What I do for you is in the mornings, many of you know that I put out my morning subscriber video for futures traders. In the afternoon, I have a subscriber video that covers GDX, GLD, and SLV, the metals for you. The two differ, and the reason is the futures trade typically from Sunday night until Friday, they go 23 hours a day. the spiders in the ETFs start trading at 8:30 a.m. and they quit, as you know, at 3 p.m. Now, I'm dealing there, of course, Chicago time. So the mixture is fascinating as I've been doing these, because you get an edge out of the futures to have an idea what to do in the morning with the spider. My futures video covers all this, and there's a slide bar on it, and you're able to slide around. It'll light up the section that you're in. There's also a lexicon on the side, so you can just click that if you want. But it's all about teaching. It's all about talking what happened in Asia overnight, Europe overnight, here, and what's impacting what. So I record that, and I typically start at 5:40 in the morning, and it's out to you typically before 6:30 a.m. And that's Central Time, so you can work with it. Tie together with it the ETF spider, and I think you got a full day's package. So how do you find out more about this and read about them and take advantage of them? It's really simple. Go to our website, www.iraepstein.com. Under the word research, everything is explained right there. Yeah, I do charge for these. They're minimal charges. I try to make them like a tick in the futures market, so that it doesn't matter the money. The idea is, can I help you with ideas? I don't want to guide your trading. I want to make something ultra clear. I want you to see what I'm seeing on a chart, why I'm seeing it. I'll tell you if I'm buying, selling, or my recommendations are really buying, selling, because I don't necessarily trade all these. And away we go with that. I'm Ira Epstein. You have a great day, and I will talk to you all come Monday.